Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, January 9th, 2020. What I want to do is cover the energy sector. There's quite a few charts. I started to take some screenshots to get them out to you guys. Actually, had a comment in the trading room. I shared my thoughts there. I'm going to share it here as well because I think there's a trading op coming up here in crude oil. Now let's start out with CL. I've covered this chart now. Same trend line here. The primary uptrend line for quite a while, for weeks. We've had these divergences building. We've had some big volatility due to the events going on over in the Middle East. And then I believe I glanced a headline of an article. I didn't really go through the whole thing, or maybe just scanned it. And the gist of it was, look, there was these spikes in oil due to that, but they're getting faded. And the reason is the U.S. We're net exporter. We're washing oil, and so it's not like the old days where we were as dependent on oil in the Middle East. And I think that's part of what's going on here and why their traders have faded these initial pops. It's like Pavlovian dogs, just like the dip buyers buying the dips. Bell rings. Guys remember Pavlov, the psychologist that dealt with conditioned stimulus equals a conditioned response. Well, traders are conditioned when they hear something like missile strikes in the Middle East, especially with involving the U.S. Boom, you're going to see crude future spike. But again, we've seen that especially that last spike get faded very, very hard. I pointed that out in yesterday's video. That is one of the biggest drops in crude oil in quite a while. So what I'm going to do is just go over crude oil, the charts, where I think it's going, where the next trading op is, because the question I had in the trading room was, hey, I know it's Randy, I might be late to the party on this, but I'm looking for a trade on drip, and I laid out my target, which I'm going to do there. But I said, look, the upside I think at this point before a tradable bounce is probably minimal. But what I wanted to point out, which I did last night, just if you didn't catch that one, we haven't seen a drop like this in crude oil since right here, and you can see what happened after that. So although it could be, well, here's one, we had a drop and then a kickback rally, but it didn't end well. Usually you get that impulsive of selling, especially after an extended uptrend. Remember, we're quite overbought right here. You can see the RSI overbought. The last time we exceeded the 70 level on the RSI was back here. Now we continued to stay overbought, but then it resulted in this. So, in other words, the risk reward is not very favorable now. And what I'm looking at here is a bounce trade. Now, there's a lot of moving parts, and that's why I decided to do a video. Again, I know it's more convenient for you guys to see static charts, have them there. You can zoom in and out, replicate your own charts, and I will try to get those out. But until then, just stop the video, pause it, and you can replicate charts here. So those are the things I'm looking at on crude. We're overbought. Again, we came real close, pretty much touch a line there. You can see that's it. No other overbought readings, and you can see what happens. So number one, it's not this isn't very good for crude oil. On top of that, the market, I am quite surprised. I've traded long enough to not be shocked by the resiliency of this trend, but pretty darn resilient. It's really pushing the upper ends of what we need to see to keep those sell signals from a week or so ago intact. We're at the top of those ascending broadening wedges. And so kind of where I'm going with all this is I think there's likely a bounce trade coming up here in energy stocks, then maybe more downside, especially if and when the market finally gives us some good sell signals. So let me just go over what I see, and you can be the judge of what you decide to do with your positions. All right, so there it is, some conditions, if you will, similar conditions. This goes back a couple years on the charts that didn't bode well in the weeks to months going forward for crude oil. So one way to say that is I'm very, very, very near term bearish on crude. Why? Because let's start back here. I've been pointing out the divergences, and I've had these targets now for again weeks. I believe the same targets here: 61.17, then 60, and then 58.69 is the final near-term target where I expect a meaningful reaction. So here's what I see in the charts. We're almost there now. We had a reaction. We blew right through that 61.17 target, almost like it wasn't even there, and that's pretty bearish. I expected a reaction. Usually that's why I have these levels, but we didn't get one. But we already had reactions there, but again, we blew through there. This one we got a reaction. We had a momentum fueled overshoot, and then you can see we came on it. I can define a reaction as a bounce and or consolidation. You know, when you're on the home page, if you notice I think they put the words of the system will put them in italics. They're called tooltips. If you hover on a term like reaction, you'll see the definition pops up there. Again, when you're on the home page, hover your mouse over there. Now here we are. We're at that next target, and so my bounce zone is anywhere from right here, 59.68. And what I actually favor is a little overshoot of that that support, because I think a lot of eyes are on there. The momentum fueled overshoot will probably take it down to this trend line. Either way, let's just say we reverse anywhere from here to here, and that's not much. That's not a very big difference there. Maybe a % or so on crude. I was going to measure it for you, but then I'll move the line. You know what? Let's drop this down a little bit because I grabbed it anyways. I moved it. Yeah, about a % Okay, about 1% drop, and that's about what I see in the energy sector as well. So there it is. We are at a what I consider a high probability bounce target zone. You might be thinking this now if you're pretty well versed in technical analysis. You might say, Randy, don't you see that bearish pennant right there? It's not a bear flag. A flag would go in the, like this, but a bearish pennant's the same exact net effect. It's a close cousin. You just take the shape of a pennant instead of an upward sloping flag. That's a big flagpole. If that plays out, sometimes they do. Your target's all the way down there. I can't rule that out, but again, so if you go long here for a bounce trade, you just don't allow that. You allow a little momentum fueled overshoot, somewhat stop clearing move, and that's it. So there it is. Maybe 1% or so downside, possibly less. Sometimes they reverse just shy of support, and then I think a bounce, what I call a tradable bounce. And after that, well, it gets tough. Let's look at the charts and we'll take a look here. All right, so that's crude futures. You can trade it many different ways. You can use, if you don't trade futures, that is USO. This is one of the most liquid and popularly held and widely traded ETNs for crude oil. You can leverage it up with DWT, UWT, I think it is, and then UWTI, I think is another one. There's a bunch out there, guys. Even 2-time leverage ETFs, but it's the leverage factor. It's simple. You need to take less of a position in the leveraged ETFs to account for that leverage. So it's really kind of a wash. In other words, take 10,000 of USO or take 3,500, 3,300 of I think this one's a 3-time, UWT. All right, so that's that. Now let's look at the sector ETFs because you get more bang for your buck. All right, so if you've been with the site for a while, that was in recent weeks and months. I've laid this out as being, in my opinion, the most bullish sector by far, without a close second, in the S&P 500. When we were setting up here with these divergent lows, very strong positive divergence. I want to say this just right now, get it all out there. This still looks like longer term bullish. So that would entail most likely the stock market and the economy continuing to rise, oil continuing to hold up. So what I'm looking at is, I'm still near term bearish. I was bullish back here, started getting bearish here, looking for a pullback. Said, watch for a break of this uptrend line on XES. I'm kind of all over the place here, guys. There's 3 ETFs that I follow. The main, let's keep the leverage out of it because these charts are clean. The primary sector in the energy sector, the primary ETF is XLE, has your big oil, integrated oil, like Chevron and BP and all those big companies, Exxon. XLE is now back testing both downtrend line, the primary downtrend line as well as uptrend line support, and I believe that I laid that out in recent weeks, that if we got a pullback there, that would be an objective long entry. So I wanted to point that out. These guys started to correct a little bit before crude topped, and again, they overshot this first target here, about 61.45 by a little bit. Then they broke the trend line. There was your sell signal. They already hit once. That was an objective long to have a bounce trade. You can see they bounced right back to that 61.45, right around there. And now we're back to intersecting trend lines, downtrend line, uptrend line. So dual support. There may be a bounce trade, I believe, coming up here anywhere from about now to maybe another 1% or so downside. It could get worse. but I think it only gets worse if the stock market takes a pretty good dump coming up here soon. That's my thoughts. Why this chart's pretty constructive. The PPO is above the zero line right now. That indicates a bullish trend. It has been since right here. We've had some whippiness because energy sector was kind of bottoming here, and then it recently broke out. And so you have that trend indicator bullish, just like it was back here and over there. So there's one thing, and again, that's the main sector, if you will, coming up on support. And if that breaks, there's certainly some support levels down below. And let's look at the subsectors. I like to trade these guys, XOP and XES. You get more bang for your buck. They're a subsector of the energy sector, and you can see down on the chart. This is the Spiders S&P Oil and Gas Exploration and Production ETF. So these are, you'll have some overlap with XLE, but this is purely the E&P companies. And you can see, so the bigger picture is we had this breakout here, which again was highlighted recently. You had a primary downtrend line, which formed a bullish falling wedge pattern with the divergent low, everything I like to see for long setups. Breakout, nice follow through, but we started to get some cracks right about here. We broke down and then back tested that uptrend line, and a perfect tag of my first target there. First target, the breakout level was 2274 plus the trend line, and now we're back testing the 2274 support. We could come down a little further. That is certainly possible. I mean, anything's possible, but I think this is probably the range where we bounce from here down to maybe a back test of it. Indicators are still constructive for now, and let's look at XES as well. XES, again, breakdown back test at the first target zone here, 815 to 832, more of a resistance zone. I probably see right there that line should have been a little bit higher to come in and hit this reaction low, and you have that reaction high right there, and that's where I should have had that line, and we'll put it there now, especially because we've had another reaction at 845, and we extend that, and you can see basically breakdown back test, and we're rolling over. So this gives us on XES till the most objective buy points down there, and that's about a 4% drop. So that's the range right there. 750 we'll call that. You might want to step in a little bit early, especially if the broad market holds up. Again, everything I see here, constructive, divergent low. Longer term, this looks like a bullish chart. I can't promise where oil or anything's going, but this is a breakout. Looks like the initial leg up, followed by probably a corrective wave, and then maybe the next thrust up here to my next target around 958, and possibly that additional target there around 1044. Okay, remember Jay Newman, who was the one in the trading room, asked about DRIP today, and I said that was earlier. It was about 2-3% ago this morning. You could see when I replied, I said my next target here is 61. So I said not a lot of meat on the bone. My reply is you have about 2.5% to get there. We already closed that 2.5% gap right there since I made that comment. Not even, I don't know, half an hour ago or so. Again, that's why I wanted to get the video out so you can see from there we thrust it up. So pretty much that's it. Now that target is hit. So my advice there was, hey, look, there may be more upside coming, but that's a pretty good resistance level on DRIP. And of course, it coincides with XOP support. Why? Well, reaction, 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 2 reactions more right there, several more reactions there, several more there, big old gap right there. So a lot of reactions there, and of course DRIP is a 3-time leverage over time. You're better off using excuse me, the non-leveraged chart. In other words, that would be XOP. DRIP is 3-time leverage. You're going to have some decay over time. But with that being said, sometimes traders will look at these charts as well. If they're trading DRIP, that's what they're looking at. So you want to take that into account. So there it is. We're at resistance, and the opposite of DRIP is Gush. So I'm thinking now a bounce trade on Gush. There's Gush back testing the trend line, and that's why I'm doing this video. In fact, I may pause this. Okay, I just wanted to take a starter here, small starter position in Gush. Again, there's more downside. I just showed you an XES, maybe 4 or 5% or so, but I think that's on the high end, and we may overshoot this a little bit. But again, it's subjective. So there's Gush. Let's give you targets. Let's go back to drip on the 60-minute chart too. I wanted to cover that, and again, that's why I wanted to do the video. Sorry, this is what drip looks like on a 60-minute chart. Nice, clean chart. Recently closed some of this out. I wish I'd closed out before. I had a trailing stop that I just went into the account to see if I was still in it, and I'm out. That was in one of my active or IRA accounts. Anyways, this was a nice little falling wedge right here. We broke out there, and broke out through this bull flag right there. Perfect little bull flag pattern, impulsive break to the upside, but there's that $61 resistance level I just showed you on the daily chart as well. So it's pretty decent resistance on drip. And if it blasts through here, I think it'll probably be a momentum fueled overshoot. There's maybe a little more upside on the measured target on that bull flag, but I think that's about it. So that's the point. So I think there's a pullback trade. You can short drip, or you can just buy Gush. It's up to you, which way you want to do. And look, if I just showed you, I have a little bit of mixed thoughts here. There's, sometimes trades are really straightforward, and the stars and the moons align. But at this point in time, like I said, there's a possibility crude could just keep going down, because I showed you those periods where we had those similar conditions, and so we may not get much of a bounce trade. And that's all I'm looking for right now, is just a bounce trade right now on crude. Mainly all going back to this. Coming in here, crude should bounce. It's oversold. I think a lot of traders are going to see this flag and start, licking their chops and thinking, oh my gosh, well, there's your bull flag, there's your flagpole, so that means crude's coming down here, and this may be one of those cases where you get the false breakdown on the flag and then they reverse it and gun it back up, and again, you might get a tradable bounce there. And if not, hey, maybe the flag plays out, stops somewhat below, and that'll save you from being long crude if it goes down much further. But again, I've been eyeing this level for weeks now. That was my final target then, and there's no reason to change that now. I'd like to see a little evidence firming up, and I think we're going to get it here. So a little positive divergence right there, 60-minute bullish divergence when we get down to that level, and that should be the catalyst for a bounce. How far will the bounce go? Well, at least to 60, I think, back to 60, and I'm actually leaning back towards that 61.17 level. So there's my bounce target for you in crude. Whether you trade crude, whether you trade CL crude futures or any of those ETFs or ETNs, you also have the energy stocks. They're probably going to go in line with crude oil. In other words, XLE, XOP, XES, drip, or Gush. They should all trade in line with crude oil, give or take. Sometimes crude will reverse first and then they follow, or sometime the other way around. Okay, and quickly, bounce targets on XOP. If we do bounce here off support, or let's say that support's taken out, we go down to the next support here. Let's just assume we'll get a reversal here soon. I want to wrap this up, get the video out to you guys, and I'll try to I'll probably post some charts, maybe if not with the video, below in the comments section after the video is posted. There's a little smaller trend line right there. There's a primary trend line. This is what we saw in the daily chart. Uptrend line, breakdown, back test, and then we had this minor trend line, kind of like I showed you on the index futures this morning. And there's that first support there, about 22.88. So a bounce, I think, could probably bring us back up to, let's say this area. And again, your perspective on the market and the longer term outlook, you can do this two ways. Either game a quick bounce trade and get out, or say, you know what, I missed this run on the energy stocks. I wish I got into there earlier, or I was in it and I took profits, when we had hit this first target and started to have the divergence on the 60-minute, and I want to hold out for this. I think the stock market has plenty of upside left this year, and I want to hold out for these targets. And what you do is you buy here, and your stop is going to be commensurate with your price target. You should always use a favorable RR, risk reward ratio, at least 2 to 1, 3 to 1 or better is, probably, better way to go. And that will again depend on, are you going up for the $26 target? If so, then that is what would that be? That's about a 14% gain. So you could use a 5% or so stop loss. If you're going up here to about the $28 level, you're talking about a 23% gain. You can allow yourself a little bit wider stop. But with that, and that's just one metric used. Also look at the charts of crude. If crude just blast on right through those support levels I talked about, and and this is going to play out. Here's another thing to look at on. Let me turn this line on now. Make it a little brighter. Here's a level to watch as well, where crude, just because we have that big bearish candle here yesterday on crude oil, doesn't mean it has to play out like that. And another way to look at this, maybe this is a new leg up in crude, and if so, overbought can become more overbought. Remember, crude has been for the most part in a bear market for a while, or at least a sideways kind of grinding market. It's not been really going up or down, so therefore you get overbought, and that's usually it. So I went over those overbought readings before, but when crude is in a strong bull, here's a strong bull market in crude back 2017, 2018, and you can see here sometimes overbought. You tend to get persistent overbought readings, and overbought can stay overbought for a while. So that's something else to consider there. So that's it. Also intersecting support levels there, uptrend line and downtrend line. So that's it. Like I said, I can make a pretty good case for a tradable bounce here in crude, in those energy stocks, and that's it. Let me get it out to you guys, and we'll go from there. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.